Good afternoon. Good afternoon. How's it going, everybody? Hope you're doing well. Thanks for joining me on this January 9th, 2024. Beautiful Monday. Actually, we're getting a severe winter storm outside right now. Everything turning white once again. So, welcome to a new year. Glad to have you with me today. Today we're going to take a look at the latest set of data that was released on Friday. Take a look at what the bankers are up to with their positions. We did a very in-depth session with members the other day, and so I'm not going to go into too much detail as I provide for members, but we're going to do a general overview of what we're seeing. All right. So, as we always like to begin, I always like starting to, by looking at the snapshot of the positions, see what they look like, okay? Here's a snapshot of those positions that the banks are holding right now. So let me just enlarge that here, and as I always like to do, I like to start off by pointing out which ones are the largest moves. That's the column here, the change column. Okay, that tells us what's the biggest mover from the previous week to the last week's data. And so immediately a few things stick out, right? The biggest one being oil, right here, with a change of a negative 64,000. Then we have USDCAD with a change of negative 29,000. And let's go green now. Then we have the NASDAQ, change of a positive 24,000. And we have the Aussie US dollar with a change, positive change of 21,000. All right, so that's briefly what we could tell by just looking at this. We see oil is weak. We see some strength in NASDAQ. The S&P 500, weak. Okay, this is something that we've been looking at over the last few weeks, is evidence that the S&P 500 weakness was coming into the market. But NASDAQ was telling us that strength was coming into the market. So that's a couple things that stick out to me. And we can take a look at those markets a little bit later on and see what the charts are telling us, okay? So that's what we have when it comes to their overall position. So let's start by examining gold. Now, this is one thing that I've been pointing out to members, is that over the last several weeks, we can see that they've been increasing their long positions, okay? The banks have been increasing their longs. And so, when we take a look at the coloration of the cells, we can see that they are becoming redder and redder, meaning more aggressive, okay? And when we look at the chart, we can see how it's plotted here on the chart. I make the green cloud because that represents an aggressive long position. So there was an aggressive bearish position at this point down here, which is what caused price to drop. Then they took profits on their short positions, and it's all been about adding to long positions ever since. Okay, so when you take a look at the data, you can see that they were aggressive back here. Okay, that represents this point in time here. And then they closed off their short positions. So when you look at shorts, you can see that they've closed them off. Yes, we reached lows of about 79,000, and they've added a little bit since then. 82, 83, not much, right? When you take a look at longs, you can see that they've aggressively added to their longs. The highs being 288,000, okay, beginning of December. Then they took some profits, and now we're at 290, okay? So not far off from the previous high. So what does this tell us? Well, for me, it tells me the banks have accumulated long. and they have yet to take any profits on them, okay? Any serious profits, like when they did with the short positions. So if they were to start taking profits on their long positions, I would expect to see a move to the downside, but that hasn't happened, all right? Another thing that I'd like to point out is if you take a look at the coloration of these cells here, they are neutral, okay? They used to be bearish down below here back in August, September. They used to be bearish, but now they are neutral, all right? We've gone from bearish, even though they've accumulated a massive long position, 290,000, which is quite aggressive. The sentiment indicator is telling us that they're neutral. And that's good. That's good. Because for this to go bullish, they would have to become more aggressive with long positions. Now, we're watching for very clear indications whether or not the banks are going to push price higher. And we have not received that signal yet. So for the time being, because this is neutral, I am sitting on the sidelines. I am not trading gold. All right. So let's move over to oil. So oil, we see that they increased shorts from 141 to 177, becoming aggressive. But we understand why this is happening, right? Because if you take a look at what took place with price, they just finished dropping price quite aggressively from $88 down to about $69. So they used to be bullish back at this point here. Okay, that was September, October. But now take a look at the coloration of the cells. Coloration of the cells, a tinge of bearishness, a little bit of neutral. So we're in between bearish and neutral. I wouldn't be that much bearish this pair because of what we have down here. Okay, this is an institutional demand area. And as we can see, price has already reacted 2 times from this area. So I wouldn't be bearish oil unless this area was removed. Okay, once this area is taken out, then price can continue down the chart. But until that happens, there's no reason to be thinking that price is going to be dropping. Right? Demand needs to be removed first. US dollar. Not much going on here, but there is something that we spotted with the dollar pairs, and we'll see that when we take a look at the other US dollar pairs, okay? But what I will point out is if we look at the coloration of the cells, we see here, let me just move this, they are bearish, okay? Why are they bearish? Well, something happened here on December 19th, okay? That's contract expirations. And I've mentioned this before in the past. A lot of times the banks will use contract expirations as a way of shifting their positions quite aggressively, right? The last time we had contracts expiring was back here. And if you take a look at their short positions, okay, look what they did. They basically cut them in half from 19,000 to 8,000. Now, longs didn't do much to it because if you take a look, you can see a steady build, right? 25, 24, 26, 28, all through the contract expirations. But shorts was the one that they cut off, okay? And that was August, this area here. So you see why they would cut off shorts, okay? They would cut off shorts. Why? Because price eventually moved higher. So many times when contracts expire, they make a massive shift in positions, which foretells what's about to take place. So now we, back in December 19, we had contracts expiring. What did they do? They cut off long positions. Interesting. They cut off long positions. Okay. So does that mean that price is going to drop? Because last time they cut off shorts, price rallied. Now they're cutting off longs. Maybe price is going to drop. Is that what that means? Well, we don't know. It's too early to tell. But we're going to take a look at the other dollar pairs and see if they are telling a similar story. All right, so now we move over to the Aussie. This one doesn't tell us much because they've been focused on short positions for quite a long time. And we've been pointing this out for forever now. If you take a look, back in September, they were aggressive with short positions reaching about 135,000, 137,000. Okay, that was back in September. Okay, down here. Then they took profits on those positions. And taking profits on shorts could fuel a move to the upside, as we've seen here. They are not focused on longs right now, as you could tell. Coloration of the cells, blue. That means they're very cooled off, meaning the banks aren't even focusing on long positions. All right, so since nothing's going on with that one of any real importance, we move along. USCAD. So here's the other dollar pair that I want us to focus on. Remember what we were seeing with the US dollar and the data, right? The cutting off of long positions, which leads us to suspect that maybe price could drop, right? Okay, so now let's take a look at what we have here. So the first thing I will point out is if you look at this column, okay, and if you look at the column next to it, immediately you should see something. Okay, there's a track record here, a track record. Okay, so let me take you through this track record. If you look at short positions, what do we see? They were neutral, a little bit aggressive, and then nothing. And then a little bit aggressive, then they were neutral, and then just the last couple of weeks, a little bit aggressive. Anything steady there when it comes to shorts? Is there anything there that's showing you the banks are accumulating and piling into something sustainable? The answer is no. And when you understand that the banks take a long time to accumulate a position, you're going to recognize that you're not going to see positions fluctuate very quickly from week to week to week to week. All right, you're going to see it. There you go. You're going to see a slow, steady. Let me just shut off my ringer here. You're going to see a slow, steady buildup of positions. So let's take a look at longs now. Look. Okay. They went from a little bit of aggressive to neutral, but then since then, which was August 15, July, August, right here. Okay. August. Take a look. Steady, 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 all the way to now. Steady all the way to now. Okay? So what you see is this. They've been steady with their long positioning all this time. So you have to ask yourself, why would they not close their long positions at the highs here? If they knew the price was going to drop, why wouldn't they close their long positions at the highs here? So you can come to some logical conclusions, but one of the logical conclusions that I come to is I think to myself, well, when I look at the supply and demand dynamics that's taking place on the charts, it leads me to suspect that there's going to be more upside coming for the USCAD. Okay, and so if the banks knew that more upside was coming for the USCAD, do you think that they would be offloading their long positions at those highs in any aggressive manner? I think the answer is no. At least this is what I'm thinking. Okay, could be wrong, but I'm just playing this out in my head, trying to come to a logical conclusion of why they wouldn't take profits on their long positions at the highs. Instead, what you see is them manipulating, and I know manipulating is a big word, but it really does come to that. Okay, I see them manipulating the movement of price with the introduction of short positions. Okay, these big moves here, these big moves here are caused by the banks increasing short positions. Okay, to cause a move in price. So price can drop from them taking profits on longs or increasing shorts. If they're holding their long positions and they're dropping the market by increasing shorts, it makes you wonder, if they wanted to drop price, why didn't they just take profits on longs? unless there was some reason why they're holding long positions, okay? So this leads me to suspect that we are likely going to see a move to the upside. Now, one other thing I will point out here is if you look at the coloration here, they were bullish, then they were bearish, then they were neutral, and then they're bullish again. Now, why are we neutral? We're only neutral because they closed a small percentage of their long positions and they added aggressively to shorts as price was dropping straight down to test the ascending trend line there. So that's the reason why. But if you look at the coloration here, the only main coloration that we can see here is green. So it's bullish. All right, so if I was to choose a direction, I'd say my bias is bullish for the USCAD. US Swiss, we take a look at long positions. They were aggressive, then they were cooled off, and last was 15,000. So again, we take a look here. Somewhat aggressive with longs, somewhat. But recently, last few weeks became cooled off. Yes, but we also dropped quite aggressively. Shorts, are they really focused on shorts? Not really. Look at this big drop, and it wasn't from a massive accumulation of short positions. So are you starting to see a theme here where shorts really isn't that important, but longs seem to be more important? Okay, and an interesting thing is that price just happens to be inside an institutional demand zone. Interesting. And we just got a big green candle here. Interesting. So, I mean, again, I'd have to say that my bias here is bullish, okay? We take a look at the coloration of the cells here. Green, recently neutral. Why? Because of the closure of long positions at the lows for profit taking and some increase in shorts. This can easily turn green again once momentum starts to pick up. So long positions can be had, sure, but you'd have to look at the lower time frames and watch for some momentum shift setups from down that area. All right, Euro US dollar. This is my baby for 2024. This is my baby. I have a challenge. I created a trading strategy that incorporates retail sentiment, CFTC data, supply and demand dynamics, and media posts, the news, expert advice, expert analysis from those on TV. And I put it all together to create a very powerful trading strategy that I tested out in 2023 and received incredible results for it. So some of you know that what I'm talking about because you follow us on Twitter and on Telegram, and you've seen the first $1 million trade that I opened up, which is now $2 million. I shorted at the highs, the Euro US dollar, and I got my targets down below. You should go on Twitter and search Euro US dollar, and you'll get the trade setup that I gave before the drop took place, okay? I'm not posting it after it played out and saying that I got in, wink, wink, and you should trust me. No, I'm giving you the positions before they play out, okay? And I'll be doing that sporadically throughout this year, but I will be posting every single trade to members within the member community. But let's get back to CFTC data. So what are we seeing here with the CFTC data? So first thing I will point out is, look at the column, boom, all the way down. Longs are the focus of attention, okay? And they have been for some time. Now, this goes back to May, okay? And May is here, right? All the way to now. Okay? All of this move has been all about longs, okay? But there are some key things that I pointed out for members in my latest video. that are telling us exactly what the banks are doing with the euro US dollar, which is just adding more to the probability of the euro dropping over time. And so we're going to make a really nice profit on this short position if it continues to play out as we suspect. I think there's about 85% chance that it's going to do exactly as we think. But, you know, there's always that chance that something else can happen. But we always look to the data and take a look at what the banks are doing to give us an indication of whether or not, you know, our supply and demand analysis is leading us in the right direction. So we look at shorts and we see, you know, October, November, which is down here. The banks added shorts to help price to get down to the lows. Then they reverse price up, and now we are seeing, oh, we saw a bearish engulf here. Well, not quite because that didn't close, but what is that? Definitely a bearish engulf, isn't it? Okay. And last few weeks, they're adding a little bit of short. Yeah, last few weeks adding a little bit of short, but nothing aggressive. The main theme has been longs, but at some point, the theme has to come to an end. At some point, they're going to have to take an aggressive profit taking on their long positions, and I believe that moment is about to come up. I believe there's a setup that's taking place right now, leading up to them taking an aggressive profit taking on their positions. And when that happens, folks, holy smokes, we're going to see incredible momentum to the downside, okay? So that's what we're seeing, and yeah, let's move on to the pound. Pound's in a similar situation, as you can see, but they aggressively closed out their long positions from July back here. Okay, July is here, this peak. So this drop, they aggressively closed out their long positions. Then they added some short here until they closed them, and then they're adding back in a little bit. So if there was a drop here with price following along with what the euro US dollar is doing, it likely will not be as aggressive to the downside as what we'll see with the euro. Okay, hence why I believe euro US dollar offers a better opportunity for that trade. Now we look at the US dollar Japanese yen. This was an interesting one. So you can see that they were aggressive with longs, right? And then they took profits on longs. And what happens when that happens? They take profits on longs, and it causes price to drop. Where did price drop into? In institutional demand area. So we gave out a long signal on that before it played out. I posted on Telegram. You guys had the trade before it played out. There's no reason why anybody couldn't have taken that trade. And the targets were placed there. The stop loss was there. Everything you needed to take a winning trade was there before it played out. So there's no reason that nobody could have taken that trade. So let's look at shorts again, okay? Like we were doing with the other ones. When you look at short positions, what's the steady theme throughout that column? You see a lot of blue, doesn't it? Don't you? Right? A lot of blue in those cells. So what does that tell you? They're not even focused on short positions, the banks. Okay? They're not focused. What have they been focused on? Accumulating longs, pushing price up, taking profits. Accumulating longs, taking profits, accumulating longs. What's the stage that we're in right now? Taking profits. Okay? And that's what's really fueled this move to the downside here into this weekly area of demand. Okay? And so now we are reacting from an institutional demand zone. So what do you think is the logical next phase? I mean, we can't know anything for sure, but what we can know is that after they took profits, they accumulated longs again. After they took profits, they accumulated longs again. Now they're taking profits. Demand is in play. What do you think is going to be the next thing? Probably accumulate. Probably. That's a logical conclusion. And when you have demand in play, wait a minute. Didn't we have some demand in play on other US dollar pairs? Didn't we see signs of upside on the dollar pairs? Aren't we seeing strong evidence to suggest a move lower in the euro? So when we look at the pairs and we look at the data, we start to correlate. And we start to see that there's evidence to support a stronger dollar and a weaker euro. All right. Now we go over to the Kiwi. I'm not a big fan of what's going on with the Kiwi. It's very strange, just like the Aussie. Cooled off with longs, shorts. They were aggressive. Recently, they took some profits, and that's about it. Okay, so let's just move right past that. Let's go to the S&P 500, because this is the one that we were talking about earlier. Look what happened after contract expirations, guys. This is huge, okay? This is like so out of nowhere. Contract expirations, December 19. Yeah, let's do this better. Contract expirations around December 19th, and look what happened. They increased their shorts from 322,000 to 444,000. That's a massive increase. Okay? Massive. Let's look at the coloration of the cells. Do you see any theme here? What color do you see a lot in those cells? I'd say red. Bearish. Okay? When you look at the long column, what's the theme here? What color do you see predominantly? Blue. Neutral. Not as aggressive. Right, but you're thinking, yeah, but how did price get up there? Who the heck is buying this market? How did price get all the way up there? Well, that's the thing. If you do a little bit of research, you'll find out who's buying this market. It's been reported how much money has gone into buying the stock market over the last several months. So I'd be very cautious with respect to the S&P, because although it's looking extremely bullish, the fact that the banks just piled into a massive short position at the highs here, you know, it makes me really wonder. So we have that. And then let's switch to NASDAQ, telling us something different. In fact, the NASDAQ is telling us that they're accumulating longs quite aggressively. Excuse me. And over the last several weeks, they've reduced their positions quite dramatically. 63,000 down to 41,000, quite dramatically. So there seems to be a bullish momentum that's building here slowly. Okay, you can also see that in the net positions. If you take a look at the net positions, you'll see it's slowly building to bullishness. Okay, not so much here, then a little bit, not so much, a little bit, and then slowly over the last several weeks, bullishness. So we're getting mixed signals here. We're seeing very strong indications price is going to continue going higher on the NASDAQ, but I'm seeing signs to be very cautious with the S&P. Okay, let's take a look at your comments. Thanks. How are you? I'm doing great. Where can I get this sheet? I create the sheet and I supply it to members of the school. Rainy here in Istanbul. Nice. I give them out for free. You don't have to pay. Less complicated ways of figuring this out. Trading needs to be simple with complex understanding. Okay, somebody doing advertising on my channel. Beautiful. 2127 here in South Africa. Nice. Sentiment trader. Hey, Kevin. I just joined. Wonderful. Thanks for joining. Vinny joining from Kenya. Beautiful. Link report. Also from South Africa, Cape Town. Beautiful. Good evening, Kevin. Just came back from my country home. Beautiful. Nice to have you. All right, so that's it, folks. Hope you enjoyed it. Thanks for joining me today. And yeah, look forward to doing more sessions with you in this new year. All right, Happy New Year. And take care.